Friday, March 8th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning we got some news from China that indicates, in my opinion, that the world economy is coming to a grinding halt, that we might even be in a recession already. I spoke earlier this week about, or maybe late last week, I don't remember exactly, how the US economy is losing steam. We've had the Federal Reserve, Goldman Sachs, Federal Reserve Bank of New York, of course, Atlanta Fed, Goldman Sachs, all sharply revise Q1 GDP for the US below 1%. Some of you said, oh, they're Trump haters. No, these are not Trump haters. They're just looking at the numbers, and even under Obama, the Atlanta Fed used to make big revisions. So it's not looking great. And also yesterday we had the ECB meeting, and I'm going to talk about that and the Chinese news as well before I look at the markets this morning. It's around 7:39 a.m. London time, so fairly early. I've got my End of Fed mug here, a maneco 64 End of Fed mug. It says robbing Americans since 1913. If you want to help the channel, there's a link below in the description where you can go to the Teespring store. There are other merchandise as well, Billy mugs, t-shirts, stickers. It helps the channel. And I'd like to thank everyone who has contributed to the channel as well, and for the continuous support. Thank you very much. So I just have a little sip of my coffee before I start looking at the market. So the stock markets are not looking great, and I know I made a video the other day about the head and shoulder, about the objective on the downside by June 1835, I think, in the S&P. And yes, we have continued to go down. Yeah, it's still early days, but it's not looking good, the technical picture. So let's quickly see where we are right now. We've got spot gold actually up $7.50 this morning, $12.92.80. The high has been $12.93.67, the low $12.85. I don't know if you remember, I've spoken about this. If you're an existing subscriber and you've been following me for a while, maybe a month or two ago, that there was a key Fibonacci level in gold, and that it was a really long-term level at around 1283. And I remember when we're moving up earlier, late last year, when we broke through there, that was a key level. So it looks like right now it's holding that level for now, of course. Silver's up 4 cents at 15.09. The low's been $15 and the high's been $15.12. So what about the stock markets this morning? Well, they're continuing to go lower here. I think the Dow was down about another 200 yesterday, or thereabouts, I think. So we haven't had an update, I don't think, this week. We're now down to 102, 25,356. The low's been 25,347. So near the lows, down 0.4%. The S&P is 2737, down 12.4 as well. And the NASDAQ 100 is down 45, or 0.2%, 69.81. The dollar, of course, yesterday did very well, mainly because of the ECB. It drove the euro a lot lower, and I'll talk about the ECB in a moment. I would expect maybe the euro to rebound in the short term. There's always been a lot of talk about how the euro is going to collapse and going to implode, but the euro's been around for 20 years now. When it was launched, I think the euro even dropped to below $1. So we need to keep that in perspective. I'm not trying to bash any currencies, just look at the reality of it in the longer term. So the euro this morning is up about 12 pips, 112.05. The pound is unchanged, 130.87. Dollar is down quite substantially against the yen this morning. It's up. It's down 0.5% at 111.01 or 57 pips. Against the Chinese currency, dollar is unchanged, 673.34. The commodity energy sector, the WTI is down 1% or 52 cents at 56.30. Brent is down 69 cents or 1% at 65.54. The bond yields have dropped significantly this week. We started out at 275 in the 10-year. We're now at 263, so down 12 basis points. That means people have been buying treasuries, mainly because the stock market is under pressure and there's a lot of uncertainty in terms of all world markets. So let's look at China. Well, there's a big number came out today. Chinese trade data, and Zero Hedge here points out Chinese exports collapsed in February despite largest credit injection ever. And it's weird because when the number came out, the headline said that February exports rose 16.6%. And then they had to correct it, and they actually said that it dropped. So it dropped 16.6%, which is a massive amount. You can see here it was expected to drop the Chinese exports and imports, but not as much as it did. So investing.com has exports dropping 20.7% and imports dropping 5.2%. They were expected to drop. The forecast, as you can see, and the trade balance, the surplus for China is only 4.12 billion. It was forecast 26. The excuse they're giving is that there was uncertainty over trade negotiations and that Chinese New Year came earlier. So a lot of the export orders and all the trade was done in January, so it's going to take away from February. But this is still a huge, it's even worse than people thought. As we know, loads of things are made in China. So if China is not exporting as much, that means the whole world economy is slowing down in most. And it makes sense if you look at what we've seen from forecasts of US GDP, what we saw yesterday with the ECB. The ECB, basically, Mario Draghi, the president of the ECB, has come out and he's blamed everything except, his policy of negative interest rates, massive money printing. He's blamed all that for the reason why the economy is not doing well, and they're going to have to revise their growth, I think, from around to around 0.6% for the whole Eurozone. I'm not sure, but it's an anemic number. They revise it a lot lower. And last year, the guidance for ECB or Euro interest rates was that they're going to start probably raising rates this summer, 2019. But now that's been put back again towards beginning of next year or even March next year. The ECB has also reactivated the LTRO, which is a lending facility for the banks for another year. So things are not great, and these people are in denial, of course. What should have the central banks have done? Well, the big mistake they made was bailing out the system in 2008 and injecting it with trillions and trillions. A lot of people say, even people in the alternative and people who have contrarian views, though, they say, oh, no, they did the right thing to bail them out. What I don't agree with is the QE that they did. But I'm sorry. In a market economy, you need to let things fail. That's the only thing. It's like the analogy of the trees in the forest or the forest fire. You need to once in a while, the forest has to burn down so that the soil gets strong, fertile again, and things grow again. It's the same thing with the economy. Of course, things don't burn, but it's the credit cycle. And this is the whole problem, not just with the ECB, but the Fed, the Bank of England, the Bank of Japan especially. They're the champion at this, not allowing things to correct. And this is what we get, anemic growth. But Mr. Draghi yesterday was blaming Brexit. He was blaming the trade disputes. He was blaming geopolitics. Never once mentioned his useless monetary policy that basically destroys the market. And without a functioning free market, an economy doesn't function properly, because the market is the only way where you're going to get proper price signals for all actors in an economy. We saw what happens in a centrally planned economy during the Soviet era. Things don't work. They eventually crumble. And it's the same thing that we're doing now. We're making the same mistakes. So that's the ECB, the Chinese as well, all pointing to signs of a massive slowdown. If anything, we could already be in a recession. There's still a lot of revisions to be done, and the data haven't come out yet. So today as well, we've got the big, this has been a number that's been the major number for over 20 years. I remember when I started out in the business in the late 80s, I think it was the trade figures for the US. And then towards the early mid 90s, the non-farm payrolls became the big number, and it still is. Do I believe in these numbers? No, they're fudged and they don't really mean much. But and they're kind of contrarian. Or you see, if we have a really good, a big drop in the unemployment rate, which we know is kind of bogus because it doesn't count all the people that have given up looking for a job, which is near 100 million in the US. Well, the expectation, the forecast, the mainstream economists see a drop from 4% to 3.9. So if we get a number of 3.8, even though it's only a tenth, that could actually hurt the stock market, because it might revive ideas that the Fed will probably continue raising rates and doing QT. The non-farm payroll, the headline number is expected to rise 181,000. The other important components to look at is the average hourly earnings, which is expected to rise from 0.1 to 0.3. If that number also comes in like 0.4 or 0.5, that could hurt the markets as well, because the mainstream and central banks, they think that wages create inflation. So if average hourly earnings are going up more than expected, that could hurt the market as well, because people could also think that they might continue raising rates. We all know that inflation is the excess increase in the supply of money and credit compared to the real economy. So we've had, tons of inflation in the last 11 years. It's just showing in paper assets like stocks and bonds. And it's even showing in everyday, items for the average person out there. It's just that they don't count it properly. They underestimate it. There you go. World economy not looking great. Stock markets seem to be keeling over. Precious metals, despite the strong dollar yesterday, held really well. So there you go. Just because the dollar goes up doesn't mean gold goes down. And today things have stabilized and gold is actually up. So that's encouraging. So if you enjoyed this video, make sure you hit the like button. If you enjoy my videos but you're not a subscriber yet, think about subscribing. And for all of you out there who watch my videos regularly, make sure you hit the little notification bell so you're notified of my new videos. You can also follow me on Twitter, Steemit, and on DTube. and I wish you all a great day. Take care. Bye.